Hi, welcome to my YouTube channel, Invest with Chikwesri. This is a platform where I teach smart investment ideas using investment tools and platforms like the stock market, real estate, mutual funds, treasury bills, bonds, and others. You cannot afford not to follow me in this channel because, as I said, we are not only interested in you cashing out or making whole lots of monies out of the investment world, but also interested in protecting and securing the safety of your capital, because without your capital, nobody knows you in the stock market. So today I want to share with you how to adequately prepare for IPOs. Yes, IPOs, they make whole lot of monies for a lot of people out there. That is also how some people also lose their monies while others are kept for a long time, tying down their capitals, which they are supposed to use to make more monies in the short term, but they have to wait for a longer time than expected in order to retrieve their monies before they can now think about, investing in other financial instruments to make monies for themselves. But first of all, before I share with you how to adequately prepare for an IPO and also maximize the profit that comes with initial public offerings, I want to first of all, share with you what an IPO is all about in the most simplest term you can ever imagine. Of course, you can't be investing in something that you don't understand. So, what is an IPO? In the simplest term, an IPO is when a company decides to sell its stocks to the public for the first time. Yes, let's assume company A now decide to sell its company stocks for the first time in a public exchange. So in the case of Dangote's refinery, the one that everyone is waiting for at the moment. So its IPO means when Dangote's refinery decides as a company to sell its stocks to the investing publics for the first time, in this case in Nigerian exchange group. So that is the trading floor where this particular stock is going to be listed. But before then, there are things you need to understand. The company don't list their stocks to the public directly during IPOs. They employ the services of people we call the underwriters. Yes, the underwriters, I think in Dangote's refinery, we hear people like Stanbic IBTC, Veritas Capital, and others. So these are the people that are going to serve as underwriters to this IPO. So what do underwriters do? What they do is that they buy the shares that are available from this company, then they now sell at a given price to the public. So Dangote will not sell their shares directly to you. They make arrangements with underwriters who now buy from them and then sell to the public. So that is how it works during the IPOs. But one thing you must remember is that I always say that before the IPO, there are things that actually happens behind the curtain. And these are things like private placements. Yes, private placements of high net worth individuals that go to this company directly to invest in that particular company. So these are people that have already acquired, a substantial amount of that company's shares from the company directly before the company now comes public. So, for instance, in the case of Dangote, we heard people like Femi Otodola, the chairman of First Bank, placing a private investment to the tune of $100 million in this Dangote's refinery. So we call it private placement. So these are people that are already investing before the IPO. So during that IPO, after a certain time, they are going to now start selling. So what it means is that let's assume that these people are getting these shares at the cost of, let's say, 10 naira per unit. It means that when they will sell depending on the level of hype, depending on the level of awareness that was created, and depending on the level of the the interest shown by the investing publics. They may sell it at the rate of maybe, let's say, 20 naira per unit or 15 naira per unit. So if they are selling it at the rate of 15 naira per unit and they bought at the rate of 10 naira per unit, that means at IPO they're already making around 5 naira, and this thing continues and just like that. So they'll be making more monies than you that is actually waiting for the IPO. And most of us are also going to get that shares in the secondary market. You're not going to get it in the primary market. That is, secondary market means that the shares has already been traded. So you are buying from the people that are reselling. That is second hand. It's just like, instead of you buying a car from the company direct, you are now buying from somebody that have bought from the company and use it for a certain period of time, maximize the gains and the profits, and then it's selling back to you. So that is what it means to trade in the secondary market. And unfortunately, that is where most of us are going to get this particular share during its IPO. So another question that is begging for answers is, why IPO, especially for companies like Dangote that is said to be one of the wealthiest men in Africa. So why is he doing IPO? Why? Why can't he just run the company by himself since he has all the resources available? Why is he involving or trying to go public for this IPO? Number one, he wants to raise capital, because raising capital is more cheaper than even using the money that you have to, fund the business, especially when you're raising your capital from the stock market. It's actually cheaper. Just give people a certain percentage of the company, and then they give you enough liquidity for you to, run the company and have the capacity to expand more, instead of drawing from the monies that's already there, which you can actually use to, start other business or invest in other sector of the economy, or bring about diversification to your company. So the next reason for IPO is to provide liquidity for founders. Yes, founders and early investors. So the IPO provides liquidity for them. What do I mean by that? So just like what I just explained, Dangote has the money, but he needs liquidity to expand, to diversify, and do whole lots of things. So apart from him, other early investors like venture capitals, people that did private placements, so IPOs provide them with a kind of return on their investment for them to use and, invest in other sectors or other business of their interest. And the next reason for IPO is to increase visibility. Yes, to increase visibility. Many people wouldn't have known about this Dangote's refinery except for the hype, the media hype, the media talking about it, everyone talking about it, investors and financial analysts and advisors talking about it, talking about the valuation and all those things. So it's a kind of make the company to attract lots of investors and also to increase its visibility. I think somewhere last week, we read the news about people from South Africa coming to, invest in Dangote's refinery. We also heard about the government of Kenya also inviting him to also, think about establishing such great project in Kenya. So that is to tell you what, the visibility can do to a business. So apart from raising capital, apart from, providing liquidity for investors and founders, IPOs also increase visibility of that particular company. And then another thing you need to understand is that despite IPO being very good for the company, it also has some level of risk that it also gives to the company. Yes, it has some risk. We say in this part of the world that everything that is good also have a bad side of it, or everything that is bad also has a good side of it, anyhow you want to put it. And one of those risks is what we call market volatility. So when a company goes public, it means that the company can no longer be affected by only what is within the company. I'm talking about the internal environment right now. It's now, highly affected by the external environment. Like the macro economy, what is happening in that sector of the economy, interest rates, inflation rates, foreign exchange, unemployment level, and what have you. So all these things now will now become a form of risk which the company must navigate in order to succeed in its operations. And the next one is what we call short-term market pressure. Yes, short-term market pressure. This has to come from the investors expecting so much from the company because the company is no longer a private investment. It's now public. And as it's public, now everyone is interested and investors want to see value for their monies. And most time that is what brings about some kind of companies going in an unethical ways to manipulate their balance sheets and all those things in order to suit the investing public. So it brings about that level of risk to the company because of going public. And the next risk that it brings about is what we call public financial disclosure. Yes, you have to disclose your financial statement. It's no longer a private property, it's something that is public. You disclose it for the sake of the shareholders, you disclose it for the sake of investors, you disclose it for the sake of suppliers, you disclose it for even the sake of your employees. Yes, the employees of the company, because they should be interested in the financial, disclosure of the company to know whether their job security is actually secure for them to have utmost faith in that particular company. So, with all these things that I just explained concerning IPO, I'm sure you really understand what initial public offerings is all about. So just a recap, is the first time a company decide to raise money by selling its shares, selling a part of it to the investing public through a public exchange. Like in Nigeria, we have the Nigerian Exchange Group. Like in US, we have the Wall Street or the New York Stock Exchange. So that is what an IPO is. And a company don't do this directly. They do it through underwriters, having met what it takes from the regulators, having met all the things that it takes from the regulators for them to go public. So now I want to now share with you what to do in order to make money. That is the essence of this video. So the other ones is just to give you an overall, appraisal of what an IPO is all about. So now that you understand what an IPO is all about, so I want to share with you what you need to do during the IPO. So number one, during the IPO, I've been able to establish that there are people called underwriters. They buy from the company, then they sell to you at their own price. Then secondly, I've also been able to establish to you that there are also some people that did what we call private placement, PP. So these people also are going to be releasing some a number of their shares in order to raise money, in order to make profit during the IPO, even though that it is said that they also have a kind of 90 to 180 days benchmark before they can start selling to the public. But they actually make money during IPOs in order to kind of provide a shortfall or to make profit from their investment. So what are you going to be doing? Especially I'm talking to beginner investors, I'm talking to retail investors like us. What are you going to be doing, or how can you adequately prepare in order to maximize profit from IPO? Number one, ensure you enter early. Ensure you enter early. That is the best thing you can do for yourself. For instance, at the opening of the market, you may discover, especially a stock that has been overhyped, like that of Dangote's refinery. You will discover that probably, let's assume at the opening of the market, that the stock is selling at the rate of 10 naira per unit. you will discover that maybe in a period, because there will be so much pressure, there will be so much, demands. There may not even be any form of offer, like people trying to sell. There will be a lot of people, bidding to buy. There will be a lot of bidders. People are bidding. Everybody wants to buy. Nobody wants to sell at that particular point in time. So a stock that you are supposed to get at the rate of 10 naira, you may be getting it at the rate of, let's say, 20 naira or 15 naira. So let's assume that you were able to buy, let's assume you're able to buy 10,000 units when it was sold for 10 naira. And then you discover that within a period of 2 hours, 3 hours in the market, you may be shocked to hear or to know that the stock you bought at the rate of 10 naira is now selling as high as 20 naira or as high as 25 naira. So what I'm trying to tell you now is, at that particular point in time, you have already made about 15 naira profit per unit. So what next should you do at that particular time? That will take us to the number two. And number two is leave the market when the price is high. Yes, there will be so much liquidity that time. So you entered the market when it was 10 naira, and now the stock is trading at the rate of 25 naira. Don't overstay your welcome. Don't overstay your welcome. Don't be too greedy at that rate of 15 naira. So that is why it's always good to prepare with enough capital, because somebody that is using 1 million naira will not get the same profit like someone that is using 20 million naira. It cannot be the same, because the more the volume you have, the more the profit you make, from the difference, from the difference of the buying cost and the selling cost. So somebody that bought with 1 million naira at the rate of 10 naira, let's say maybe making something like, let's say, 100,000. And then somebody that bought with 20 million or 30 million, 100 million, maybe making something like 10 million naira or 15 million. So that is how it works. The more volume of money you have, the more profit you make. So when you have entered, when it's early, and when the market is high, when all stakes are high, nobody is agreeing to sell, and the demand side is higher than the supply side. So I think at that moment, you need to leave the market. You need to supply. You need to become one of the suppliers. Yes, act like the underwriters at that particular point in time. As I said in this video, underwriters are those who buy from the company. And so in your own case now, you have bought when it was too cheap. So become a seller, supply to the market, and collect your 15 naira, difference, and leave the market. Yes, collect like 15 naira difference and leave the market. So at that point, what will you do after leaving the market? Does it mean that you will no longer own your choice company? You are no longer interested? For some of us that want to become part and parcel of that particular company, like the case of Dangote's refinery, want to tell people that I'm part of the shareholders. I have shares in Dangote's refinery. No, this is not me telling you to leave your dream company. No, you're not leaving your dream company, but you are acting, the way the market is also reacting. And then what do you need to do next? What you need to do next after exiting the markets, like selling off the stocks you have bought. Remember, you have made 15 naira or 10 naira per unit. So what you need to do now is, as you have exited the market, you wait, just relax, don't be in a hurry. A time will come when this particular stocks, it will get to its peak. It will pick up to a certain level. Some of us at that time, maybe even so that the rate of 20 naira is now, it has now peaked to the level of 40 naira. Don't be greedy. You have collected your own. Just stay off the market, because that is danger beckoning on you to come. So just stay off the market. In short, wear your Google, close your eyes, and allow every profit to pass you by. Just take that 15 naira, take that 20 naira, and just relax. Wait. If it happens to be like 1 week, 2 weeks, 3 weeks, just wait. And then what you will see is, at a certain level, at a certain time, the stock will now come crashing, because people have started offloading. It has reached the peak of its demand level. Like, people have now started realizing profit, so they are offloading to take their profit. So you that took early, you will be on a safer side. So you'll be shocked that that stock you bought at 10 naira may even come to the level of coming around 7 naira or 8 naira. So if you come to 7 naira or 8 naira, that is the main, value of that particular company. So what do you need to do then? You need to now re-enter. So as you are re-entering this time, remember, you have already made profits. Let's assume the time you bought at 10 naira, you were able to buy like 100 units. So right now that you make 15 naira per unit, as a result of selling it at the rate of 25 naira per unit during the IPO, it means that you have enough money now. Instead of buying maybe, let's say, 100,000 units as you bought before, you can now buy maybe something like 150,000 units. Yes, because you have more money and you have dream of, being an investor in this company. So when that price have really come down, so you have to now re-enter the market. When you re-enter the market, now what do you do next? So that is when investors are separated from people that just come to scout for profits. So at this level, you will now relax and now have a long-term perspective. Remember that in this channel, I always stress that stock market is not a get quick rich strategy. It's a long-term, wealth creation strategy. You have to adopt long-term mindset in order to cash out so much from the stock market. It's not something that you move in and then you are moving out. But during IPO, this is, allowed. You can actually do this to increase the total stocks that you can buy. As I said, at 10 naira, you were able to buy 10,000 units or 100,000 units. At 10 naira, you were able to buy 100,000 units. Then you sold at 25 naira. And then you now came back when it's selling for the same 10 naira after all the hypes and everything have settled. And you're able to now buy it at the rate of that same 10 naira. You won't be buying up to 100,000 units again. What you can afford based on the profits that you have already made is around maybe 150 1,000 units or 200,000 units as the case may be. So in that case now, you have increased your, market share of that particular company stock. And now you're maintaining a long-term perspective because in the long term, as far as that company has value, as far as that company has the capacity to upgrade, as far as the company has the capacity to meet market needs and also to withstand external market pressures, it will definitely hype again, but this time around it's going to grow normally like the way normal companies grow. So at that level, you will now also become somebody that will cash out big time, but this time in the long term. So in case you are seeing my video for the first time, don't forget to subscribe, like my videos, share these videos so that others can see it, especially beginner investors, and also tell me what you think in the comment section based on your experience of participating in IPOs. So I will see you in the next video. Bye for now.